Good morning, everyone. Good morning, everyone. It is August. Hard to believe it is August 3rd, 2026. It is so good to see you all this beautiful and awesome Monday morning here in our beautiful city of Austin, Texas. Lots going on in Austin. Do you all know the corner of Airport and Koenig? This entire area, Airport and Koenig. Wait, this is 290. Where's Airport? We've got Airport and Koenig. Y'all know where Airport and Koenig is, right? So let's just go find Airport and Koenig. Yeah, this area right here. A pretty nice area. I mean, just up and coming area in the sense where there's a lot of development happening in that area. You all take a look at this post from the ATX. If you are not following the ATX on X, you've got to follow the ATX on X because they put a lot of permitting information in that X account, which is really exciting. And this is an 8.3 acre site, Airport in Koenig. The request includes 250-foot building heights and 650 residential units are planned. This project is across Koenig from the large site that includes the Leif Johnson Ford that was rezoned for another significant redevelopment. So we all know where Leif Johnson Ford is. So that whole area just got approved for rezoning, redevelopment from commercial to residential. And the renderings look fantastic. The renderings look beautiful. I mean, take a look at that. That's really nice. I'd rather see that than a Leif Johnson Ford personally. So a lot going on, and take a look at the ATX handle at the ATX1. It is a really, really good X account to follow because they do post a lot of upcoming developments happening in the area. Saw this one come up just a few days ago. Looks really, really nice. And we continue to see long-term development here for our city, which is really exciting. The long-term prospects, I would even say medium to long-term prospects, it's fantastic for our area. So really exciting. Let's take a look at what's happening with economic news. We're starting off the day with not the best news in the world, even though manufacturing purchase manager index came in hotter than expected. And that's going to be the good one. Construction spending came down month over month by 0.1%. A vast majority of that decrease in construction is focused within residential and also the public sector. When you look at commercial construction, that sector is actually doing quite well, and we're certainly evidence. Our city is contributing to that. A lot of commercial construction happening here. The most important day for the bond market is going to be combination of Tuesday and Friday. That's going to be all about jobs. Tomorrow we've got the job opening labor turnover report. That's going to be the JOLT report at 0900 hours. And then we're going to have a lot of manufacturing data coming out on Wednesday, some employment data going into Thursday. A little bit more employment data, non-farm productivity, super important. But the big one is going to be Friday. Friday is all going to be about jobs. What's happening with the job sector? What's happening with government payrolls, manufacturing, non-farm, broad unemployment, also known as the U6 unemployment, and then the actual unemployment rate. They're expecting the employment rate to either stay exactly the same at 4.2. There is a consensus that the unemployment rate could tick up a little bit to 4.3. Last week, not the best week in the world. When you look at the bond market, we did see a bump up in rates from even Friday to today. We're back to the 6.875 on conventional 30-year, 6.5 conventional 15-year, 6.375 FHA VA USDA, jumbo, and then investor S7.25. So far today, we're down 4.5 basis points, which is not bad. The market is anticipating the unemployment numbers that will be trickling this entire week, but the major report is going to be on Friday. And even though we do not have a team meeting on Friday, I will update you all as soon as that report comes in, and I'll include a screenshot of The bond market, expect a fairly volatile week going into Friday with the bond market, anticipating what the unemployment figures will look like. That's going to be your rate update for this morning. Elevated rates, 6.875, certainly not ideal, up 1/8 from Friday to today. Let us start by updating the single best leading market indicator available for the entire Austin area. And that's going to be the new listing to pending ratio. We update this on a weekly basis. Every Monday, we capture the previous 7 days worth of activity. Taking a look at the price increase, price drop back on the market, active under contract, pending, open house offerings, interest rates, and then we compare that ratio to the same exact week of last year. I believe we're, week 31 right now. So we compare it to exactly the same week last year, just to give us a true apples to apples comparison. A quick reminder, if the ratio is at 1, that means it's a perfect market equilibrium, meaning 1,000 listings came into the market, 1,000 listings were absorbed by the market, meaning they went active under contract or pending. Anything under that 1.00 ratio, that means that we had a higher number of incoming listings in comparison to listings that were absorbed by the market. For example, before we update 2 weeks ago, that ratio is at 0.68. So if you were to take 1,000 new listings coming into the market, that means that 680 were absorbed by the market. So more new listings are entering the market that are being absorbed by the market. And then we've got the ratio the same exact week last year. If the ratio this week underperforms the same week last year, that's where you see a red dot. If it overperforms, you see a green dot. So it's really easy just to look at this entire list and to see that from February 23rd, February 16th, all the way down to May 25th, we had 15 weeks in a row where the ratio was overperforming last year. We hit a little bit of a speed bump back in June 1st. That went red for a week. We picked it back up 2 weeks in a row where the ratio overperformed. And then a little bit of a reversal right there. We went 3 weeks in a row where the ratio was worse. Thankfully, we had a positive ratio July 13th through July 20th. And now let's take a look at what's going on over the past 2 weeks and more so this week. Active under contract doesn't change. Pending is going to go up to 357. The ratio is 0.68 so far, compared to a 0.89 ratio same week last year. Bottom line, it's going to stay red. These two numbers will improve as agents update the listings to active under contract or pending. All these other numbers, new, price increase, price drop back on the market, it's a locked number. It stays the same. It'll never change ever again. Whereas active under contract and pending, more so on the pending, will continue to update as agents mark those properties pendings. Builders are notorious for taking a week, 2 weeks, sometimes 3 weeks to change the status of the listing to pending. So we're at a 0.68 2 weeks ago. It's going to underperform last year. No way we're going to catch up with that 0.89. Now let's take a look at the number of new listings. We are at, so far, because this number will be updated tomorrow morning and it'll be the locked figure, we're at 990. 990 new listings. Price increase. Whoa. 148. That number collapsed. 148 price increases. So far, we are looking at the lowest since December 29th. That's a collapse right there. Let's take a look at price decrease. Not bad. 1759, but the ratio is going to go up quite a bit, 92%, because we had so few price increases. 92% is going to be the largest percentage going back to May 27th, meaning anything that could have gone up or down in price, what percentage went down in price? That's what this means. Back on the market, let's take a look at back on the market. We're at 180, 18%. There's another really big backtrack compared to the previous 2 weeks. The lower the back on the market, apart from situations like interest rates go up overnight, that's what drew the back on the market up over the past 2 weeks. We had a pretty significant increase in rates. Buyers get hesitant. They didn't lock in their rates. They no longer qualify. They terminate under third-party financing addenda. When we see a massive volatility within interest rates, back on the market tends to go up. That's a normal thing. If interest rates are level and they're consistent, the higher the back on the market, the better the market. The lower the back on the market, the worse the market. And when we say the worse the market, it's that sellers are willing to negotiate more. They don't want to see the property come back on the market, so that buyer's going to be able to receive more concessions as opposed to the seller saying, I'm not going to give you anything. That's why back on the market tends to go down when the market is a little bit softer, or even if it's really, really soft. If the buyer has a lot of options and the sellers know that and the listing agents know that, they're going to offer more, or they're going to negotiate more during that option period after inspection. It'll then drive back on the market down. Let's take a look at active under contract. We're currently at 375. Nothing to write home about. So let's get some guesses going. Let us get some guesses going. I need 5 brave souls to guess how many pending before I click on that checkbox. Melanie is going to start us off at Melanie and Charmaine coming in at exactly 189. Very much on the bearish side of things. Seth a little bit more bullish at 199. We've got 3 down. We've got Anai coming in slightly more bullish at 210. We've got 4 down. We need 1 more person okay, we've got a few. We've got John D at a pretty bullish 222. Daniel, very bearish 175. And Violet matching Daniel at 175. This is the first time we've had 2 groups say exactly the same thing at the same time. Nadia coming in at a very, very bearish 163. Let's go take a look at the pending. Oh, wait a second here. Y'all, Seth wins the prize. Exactly 199. Way to go, Seth. Seth guessed the exact number. Okay, 199. Y'all came in more on the bearish side of things. A vast majority under 200. Vast majority under 200. Play the lotto, Seth. That's what I'm talking about. We're starting off at a 0.49. Nothing to write home about. Nothing really to get excited about. If anything, it's a continuation of last week. That's what it is. We're starting off on the slow side of things this week. And we had perfect weather. We cannot blame the weather. We cannot blame anything other than this is just what the market is bearing right now. 0.49. To put this in perspective, last week when I did my update, we're at 0.45. Fast forward a whole week, 0.68. We're starting off at a 0.49. We're going to end this time next week. We're going to be at about the 0.7, 0.72. No way do I see us overperforming last year. we're going to have a situation where out of the past 6 weeks, one of them outperformed, and we have 5 weeks that will underperform. We're going to have 2 weeks in a row where we are going to underperform. What does that tell us? That this reversal in the momentum that we've experienced, that we started experiencing back in June 1st, going into June 22nd, that is continuing. The seasonality will attribute this column going down. But we're comparing exactly the same season. This is the ratio last year. Last year, we entered July outperforming even July the year before. Now we're underperforming compared to even July. I would even say we could very well underperform July of 2 years. We're going to take a look at the exact ratio on the monthly basis. Before we do that, let's compare the same exact week year over year. 2 weeks ago, new listings positive. Starting May, we are positive 277 new listings, going all the way back to May. This negative 156 was the rain. New listings just dropped. We picked it back up a little bit at positive 18. We're negative 47 right now, meaning we're going to be positive. We will get 47 new listings come on the market in the next 13 hours and 46 minutes. It will happen. We will, or 36 minutes. We're going to get 47 new listings come on the market. That is a guaranteed. We're now down on price increase. We're down on price drop, which is a good thing. We're down on back of the market. Now look at the pending. Down 3.3, down 8.4, down 20.7 2 weeks ago. Pending, same exact week, year over year, down 20.7%. We know that agents, builders will continue to add pendings to the MLS. This number will shrink. It's going to be in the low double digits. It'll shrink down to 11, 12%. So we went from -1, +2, -3, -8. This is going to be about -10-ish or so. And we've got -45 right now. Meaning, 2 weeks ago, the ratio underperformed by 23.3%. And so far, the ratio is underperforming by 38.7. Melanie said last year was weird, though, remember? The whole year was terrible, and then we had a push later in the year. We were all very surprised. That is a very good point. And that push carried into the first and second quarter of this year. And then we're noticing that stalling into that third quarter. So it just, the market inversed. Last year, better third and fourth quarter. Very difficult first and second quarter. This year, positive first and second quarter, and a pullback in momentum heading into the third quarter. And we can see right there, June, everything changed. Something to be aware of, something that we need to be cautious about as we're entering the third quarter, especially when you're looking at pricing, when you're looking at months of inventory. I'm going to continue to say this, the most deceptive number right now between now and October, November timeframe is going to be months of inventory. We will continue to talk about that. Let's take a look at the monthly. Let me update pendings for the entire month of July. We're looking at 1530 and active under contract 2039. July of 2025, let me make this a little bit smaller. July of 2025, 0.75 ratio. July 2026, 0.67 ratio. June of 2025, 0.72. June of 2026, 0.71. There's that June right there. This is the reversal. This is where we started to underperform last year. Really good run. Take a look at November, December. It's exactly what Melanie... In November, December, they do tend to be positive months because new listings go down. That's why we always have a bump in sold going into December, because the demand starts happening in November. The closings take place in December. So historically, the end of the year, it's going to be your best new listing to pending ratio. Third quarter sets us up for that. Something to be aware, you all. Something to be proactive when you are engaging with your sellers. In one market will benefit one party, and I wouldn't even say that it won't benefit the other party. The other party just has to be aware of it. What's the benefit for the buyer? More negotiation, more options, more inventory that's not being absorbed by other buyers. Well, what about the seller? Decrease in showing, a little bit of frustration. Do we take our house off the market? Do we leave it on the market? What's going on? Showings have dropped. This data confirms that. It picked up in August in 2025, even though that is historically our slowdown. We were all very happy. That's a very good point. Remember that very, very clearly. You're absolutely right. Where are we? June or July. Let's take a look at July. Where are we July year over year? New listings plus 144. Active listings down 3%. Price increase up, price decrease drop, back on the market drop. Pendings though, down 11.7%. As of now, and we know that agents will continue to update July pendings, but as of now, 471 less pendings in the month of July of this year compared to last year. But I want to remind you that we've been in a really, really good run. We had 1,901 more properties go pending this year compared to last year up until July. So January through June, very positive, 1,901. When I add July, it's still 1,431. So 1,430 more properties went under contract this year. First 7 months of this year compared to the exact same period last year. That's great. That's something to celebrate. On the sold side of things, 1,193 more properties sold in the first 7 months of this year compared to the exact same period last year. We also know that more solds will be registered on the MLS because it's only August 3rd. This number is going to go up, and we're already at 1193. When it's all said and done, we'll be closer to the 1350. So 1,300 or so, 50 more properties sold first 7 months of this year. Let me go ahead and save this, and let's take a look at the daily briefing. We are negative year over year. This is where we take the snapshot of this Monday, August 3rd, compared to the same exact Monday in the same exact week of last year. We don't compare August 3rd to August 3rd because August 3rd of last year probably didn't fall on a Monday. So I don't want to compare a Sunday to a Monday. So we compare the Monday this week compared to the same exact Monday last year, same week of the year. Active down 0.72%. We have less actives today than we did same exact day last year, but we also have less pendings. We're down 1.23%. The market, we all know this, peaked last year at 18,146, and then it went down, bumped up a little bit, and then started going all the way back down to the end of December. This year, the market peaked, and we can actually get the exact date. What I'll do is I'll add an exact arrow here for you all. We're currently at 17,551. We're down 595 compared to last year. We are not going to we're not going to beat last year's peak. That's not going to happen. Moving forward, as we go through the month of August, active listings will slowly go down. It'll just take the same path it's taken every year. It'll bottom out towards the end of December, and then we've got a new market. This is that famous seasonality of real estate. Out of all of the active listings currently on the market, 55.2% of those have had a price drop. Active listings down 0.72% year over year. Active listings, cumulative new listings from January to July, down 1.4% year over year. So we've had 1.4% less new listings enter the market 2026 compared to 2025. 2025 was a record year, historical record year of new listings entering the market. 2026, it's the second highest year on record for new listings entering the market. I am grateful that it's down 1.4%. So inventory is not building as fast as it did last year. Pending listings were down 1.2% year over year. This same day last year, 42.95. Today, 42.42. Pending listings are up 5.2% year over year. Good news, this is the best year for pendings going back to 2022. And we are 12.1% above average. This does not adjust for population. We'll go over that here shortly. But we're 5.2% positive year over year. The activity index is negative year over year. Pending divided by active plus pending. Because of that retreat in the pending, the activity index also retreated. In its same exact number, 19.5, but this is rounding up to 0.5. So the difference is a drop of 0.4 year over year. New construction at 26.65, resale at 16.75. When you look at the top 30 cities that we track and the top 75 zip codes, we have one zip code in green, and that's going to be the 78722 zip code at a very healthy 32.26 activity index. Second best zip code at 28, and then 5033, 39, 59, 31. And let's take a look at the new listing to pending ratio for every month going back to January 2000. Since pendings are slowing down and things were picking up at the same time last year, do you think we may come closer to the cumulative for last year in a few months? Yes, that's exactly what this is setting up. Unless there is a reversal, Melanie, and I would say the only thing that's going to cause that reversal, well, the election is first week of November, and that's too late. Because this is a midterm election cycle, I would say that we're not going to notice much of a reversal until the second week of November. And by then, it could very well be too late, but it'll be a really, I'd say, good November going into December. That's what's going to happen. The election has a lot of effect going into this third quarter. A lot of effect. People tend to just hold back. People like stability. They like to know what's going on. And this midterm election is certainly affecting real estate quite a bit. When you look at July, we're currently at a 0.67. We're going to land somewhere around the 0.7, 0.72. And as far as the ratio is concerned, that will be the lowest ratio going all the way back to 2022. As of now, we would have to beat 0.75. No way that's going to happen. So we can say with a high degree of confidence that the ratio between new listings entering the market and the absorption, July of 2026 is going to be the slowest month going all the way back to July of 2022. That is a fact. What happens into October, November, December, we can speculate. There could be peace in the Middle East. Oil could come down to $55 a barrel. Rates could plummet down and everything changes. Everything changes. All we can say is where is traffic now? Well, this is it. This is where traffic is now. What's going to happen 10 miles down the road? Who knows? There could be an accident. They could clear up the accident. What were rates last year at this time? We can pull up that information. We can definitely pull up that information. Matter of fact, let me do that right now. They were worse. They were worse. For August, they were better, but July, they were worse. 672 was the average. So we can't even say that it was rates. Wow, rates were better last year. No, they weren't. No, they weren't. Now, this is the average for the month. We started, and this big increase happened over the past 3 weeks or so, because right now we're at 6.875. But when you average out the month, I would even say that we're about the same. We're just about the same when you look at rates. Just about the same. Builders are offering the same kind of incentives. Just about the same when you look at rates. Let's take a look at months of inventory. Good news, 5.99. Deceptive, 5.99. We had a really good 3 months, and we're dividing the active by the average sold over the past 3 months. But as we're heading into a cooler period, we can expect months of inventory to stay flat. We're already noticing stay flat a little bit, possibly even pick back up, and then underperform last year. Here's an interesting one. We take a look at all of the new listings that came on the market. That's going to be the teal bluish line. Then we take a look at all of the pending, all of the properties that went pending. And that's going to be the yellow. And then we just look at the difference. How many more active versus how many more pending, or how many less pending versus active. And we get this chart going all the way back to the year 2000. Last year, brutal, 6,470 more new listings came on the market that went pending. And that's year-to-date cumulative. January all the way to the end of July. This year, 4,570. So we're nowhere close to being negative. We still have more inventory entering the market in relation to what's going under contract. We're nowhere close to being negative. Of course, 2020 was the height of the market. Leading into 21, market peaked 2022. And we were negative all the way back to 2012. More properties went pending than new properties on the market. And now we've got this 3 years in a row where it's reversed itself. When you look at months of inventory for the top 30 cities and you compare August of 2026 compared to August of 2025, City of Austin is down 20.4%, which is significant and quite meaningful. August of 2025, 5.27. August of 2026, 4.19. That's a big improvement. That's a massive improvement. 18 of the 30 cities that we track are registering lower months of inventory compared to last year, 12 higher. When you look at 2 years ago, August of 2024, the numbers flip. 18 more inventory and 12 less inventory. City of Austin down 14.3%. Cumulative sold properties. This is good news. We are recording the highest number of sold properties cumulative from January to July, going all the way back to 2022, a gain of 6.2%. When we adjust this for population, though, a little bit of a backtrack. All of a sudden, we do have a 4.9% increase year over year, which is good. We are underperforming 2024 and 2023 because population is higher today than it was even 2023. So we did not beat 2024, certainly didn't beat 2023. The good news is that we did beat 2025. On the realtor side of things, this is good. A 12.2% year over year increase on the cumulative sold properties per 1,000 realtors. What's happening with pricing? Both the average and the median price went down month over month by 1.6% on the average and 0.9% on the median. Year over year, up. And I really do like this median increase of 2.3%. That is going to go down a little bit. I would say that this is going to settle somewhere around the 438.5 or so as agents update sold properties, especially builders. It is still going to be positive, but it's going to be positive somewhere around the 1.6 to 1.8% year over year. And I will take that number all day long. That's a healthy number. If we can just maintain that decent, slow, make real estate boring again, 2.3 to 3% annual increase in median, slightly above inflation. Give me inflation, add in about 25 basis points to that inflation. That would put it around the 3%. I will take that number all day long. I want real estate to be boring again. That is my dream. On the average sold price, we are down from the peak 12.79%. On the median sold price, we're just stuck at this number. We're stuck at 20% down, meaning that the market has to appreciate by 25% because we're down by 20%. If today is the bottom of the market, it's going to take 61 months for the market to return back to its peak value using the 25-year compound appreciation in the Austin area. And that's going to put us right around July of 2031. Only 2 years before Social Security runs out of money. So that'll be interesting. When you look at the median price across everything that has sold so far this year, 19,141 properties, the median sold price is down 1.6%. That's going to be the best number going all the way back to 2022. Value is not eroding nearly at the same level that we've seen over the past 3 years, which is a good thing. The average is positive by only 10 basis points. If things continue the way that they are going into third and fourth quarter, this is going to turn negative because we're only up by $824, which is not much at all. When you look at the top 25th percentile versus the bottom 25th percentile, bottom 25th percentile negative right now. Over the past 30 days, we're at $320,000. Same period last year, $324,000. That's a negative 1.5%. The top 25th percentile, on the other hand, is up 5.9%. That is a trend that we've seen hold firm just about the entire year. We've only had 2 weeks where the top 25th percentile went negative. Otherwise, it's been positive, which has been really holding up the market. When you see a red dot on this 25th percentile, it means that the top 25th percentile is underperforming the bottom 25th percentile, and that's going to be a warning sign showing us that the average price will go down and the median price will go down. Both will go down. When the top 25th percentile is dramatically overperforming the bottom 25th percentile, average pricing will go up way more than the median price. That's what that means. So far this year, 8 cities have gone up in value. When you look at the median price, this breaks down the median price for every single property that has sold so far this year. City of Austin, we're at $575,000, a gain of $1,000. That's going to be a year-over-year median price appreciation of 0.2%. The City of Austin is down only 5.7% from the peak on the median price. When you look at this overall median price, this is a discussion that I continue to have with people where they say, I heard that Austin is down 20%. And I say, well, that's not true. The Austin market, our metropolitan statistical area, every single property is down 20%. The City of Austin is down 5.7%. And then within the City of Austin, some zip codes are up. Other zip codes are down 15%. Everything is relative. It's a hyper-local market. So it's a really good thing. I love it when people ask the question, but it's our responsibility to explain the information that a 20% drop across the Austin market doesn't mean that Austin is down 20%. I could show you areas that are reaching record highs and then other areas that you just can't give the sucker away. It's a hyper-local market, and we ought to be able to communicate that and articulate that to our clients with knowledge and confidence and, of course, data. Another 2 data points that came up on the positive side, this is going to be the absorption rate, sold divided by active ratio. We've underperformed for the month of July at 17.1%. July of last year, 16.4%. So it's really good to see that 17.1%. That's going to be the sold divided by active, because we've got less active than we did last year, and sold are holding flat. So the sold divided by active, the absorption rate improved. The historical average is 31.26, so we're nowhere close to the historical average. A high ratio is going to be over 30%, a strong seller's market. Anything under 10% is going to be a buyer's market, a deep buyer's market. So the fact that we're at 17.1% overperforming last year because we have less active properties currently in the market is a good thing. The reason why we track this on a monthly basis is because now we've got less properties being absorbed. It started a good 4 weeks ago in June, heading into July, picking steam, which means what? We're going to get to the point where we're going to have more active properties currently in the market. And if a property doesn't go pending, then of course it doesn't sell, which means 2-3 months from now, the absorption ratio is going to underperform last year. And the market flow score. This still puts us in a recovery market. It still does. What we've noticed is, the analogy that I like to use is you're sailing a boat, and we've had a good run compared to last year, and all of a sudden the wind just died down a little bit. And we're just running just a little bit slower than we were last year. And the wind could pick back up next week, next month. That's why we track this on a weekly basis. Going back to when the market really started to overperform last year, we were able to call that just that week. Hey, we're doing better. We're noticing demand improving. Position your listings accordingly. Position your buyers accordingly because we track this on a weekly basis. Same thing right now. Hey, the wind is just died down a little bit. We're still moving forward, but we're now underperforming last year, but still moving forward. Let's take a look at a few more things. The activity index city and also activity index zip code. I am obsessed with the activity index because it is a leading market indicator that we ought to be obsessed with. When you look at the top 30 cities that we track, 7 cities have reached a 12-month low on the activity index. No cities have reached a 12-month high. The year over year is going to be the most telling figure that you have to look into for the specific zip code and area that you are working with clients. We've got City of Austin year over year, really good, up 9.3%. I'll take that all day long. August of last year, a 17.7, right now 19.3. There's that 9.3% gain. That's really good. The cities that are struggling when you look at the activity index, we've got Buda, Del Valle, just falling off the cliff. We've got Lago Vista, man, down 33.9% year over year. Manchac down. Smithfield doing great. Double the activity index. Spicewood doing really, really well. Taylor down. Wimberley down. Let's take a look at zip code because we do want to have a hyper-local mindset when helping clients. 78701. From catastrophic to terrible. That's good. A 57.1% increase in activity index. We went from catastrophic to terrible. I'll take terrible over catastrophic all day long. We've got the O2, 72% increase. We've got 9 zip codes that reached 12-month lows and 1 zip code that reached a 12-month high. We're going to take a look at that zip code. 17. 17 is dangerous right now. And this baffles me. I love the 17 zip code. You've got Avery Ranch area. As a matter of fact, let me take a look at neighborhood and see what's happening in Avery Ranch. That's going to be the majority of that 17. Avery Ranch. You see how deceptive months of inventory is? Avery Ranch, you've got 53 active, 11 pending. That's going to give you an activity index of 17.2%, which is contraction territory. That's buyer leverage territory. But you've got months of inventory at 3.88. That doesn't make any sense. Well, of course, it makes sense because we had a really good previous few months. The activity index for the 17 got up to 37%. In March, those properties closed when? April, May, June. April had a 28. That closed when? May, June, July. So we're dividing the number of active listings based on previous activity that was really positive. And then all of a sudden, we no longer have properties going pending. We only have 11 properties pending in Avery Ranch. Activity index drops down to 13%. Leading indicator, what will happen with the months of inventory? It's going to go up from a very nice 3.88 to 5 in the next 2 months, unless people start taking their homes off the market. If all of a sudden, out of these 53 people, 20 people say, okay, I'm just going to quit, and they withdraw, we start noticing expireds, well, then we're not going to see an increase in months of inventory, but we still have to be obsessed with the activity index. Daniel, can we check 5-1? Yes, absolutely. Let's check 5-1 and 7874 for what? 7874 for what? Give me the last. That's only like 4 digits. Let's check 5-1. 5-1's tough. Oh, 78704, I'll check that. 5-1 is tough. We are up year over year, but we're up from 12.4%, which is just terrible, to 17%, still in contraction. Better than 11.7%. June was a tough month for that zip code. We picked back up. So we've got the highest one over the past 3 months. We've got an increase year over year. So this is how I would rate this zip code. Improving and yet still under that contraction danger zone. The resource that I like for this one is going to be the how fresh is the market. And let me go find that zip code, 5-1. This is it. This is what I'm looking at. There are 93 active listings in this zip code. 18 of those were listed in the past 30 days. So 19.4% of the market didn't exist 30 days ago. There are 19 properties that are currently pending. 19 that are pending. 4 of those pending properties, not that they went pending in 30 days. The active listing didn't exist in 30 days. No one knew that property existed 30 days ago, and yet they're pending. Meaning 21.1% of the pending market didn't exist 30 days ago. And the median days on the market for those properties is 5 days. What does that tell you? You've got to be the best. You've got to be the best. You've got a listing in the 5-1. It's got to be the best listing. You've got to take a competitive approach when listing in this market because the activity index is garbage at 17%. The absorption rate is nothing to brag about. You've got elevated months of inventory, and yet 21.1% of the pending listings went under contract in 5 days or less. The hot properties, if it looks perfect, if it just everything is perfect about it, and we've got an amazing floor plan because the buyers have options. The buyers have 93 options and only 19 are under contract. Some of these factors you and your seller can affect and can control. You can control the condition, the price. You can't control the location. You can't control the competition. If you're listing or if you're going to a listing presentation and there's the dreaded functional obsolescence issue with the property where you just can't change that, or the condition is something that you just can't change, well, then it's pricing, right? There are 5 factors that affect the saleability of the house. Location, condition, competition, the overall market, and what is it? And condition. Did I say condition? Wait, let's go back to the 5. Location, price, condition, the overall market, and competition. Competition. You and your seller, and I would say the seller can only affect 2 of those, condition and price. The better the condition, well, okay, you can command a little bit more price, but if the condition can't change, and if the seller wants or needs a specific dollar amount, well, now you're at the patience, which is what Aaron said, impatience. And I'm totally fine with you being patient. Right? I don't want to lower the price. I don't want to improve the condition. Maybe I can't. Okay, well, just wait. Well, wait till when? 2031? July of 2031? Heck if I know. Just wait. Well, but I need to sell it now. Lower the price. But I don't want to. Upgrade the home. I don't have the money. It becomes a circular argument. It's simple formula. This 5 days encouraging, very encouraging. Let's go back to zip code, take a look at 04. Very similar. Very similar. Christina said, no one likes waiting or lowering price. That's it right there. I want the max price right now. Okay, well, the buyer wants the lower price tomorrow. 78704, very similar, tough zip code. Bottom line, tough zip code. Hovering around that 16.1. We've hit a few 16.1s. We had a 16.1 in January. We're up 21.2% from 13.3 to 16.1. Nothing really to brag about. A lot of inventory in 04. Let's go to the how fresh is the market. 338 current properties on the market. 65 pending. 10.8% of those 65. So only 7 properties. That's a low number. That's lower than the entire MLS. Only 4 days on the market median for these 7 properties, but it's only 7 properties. Not a high demand zip code. Not a high demand zip code at all. Let's go back to the activity index. Take a look at a few more. Which zip code reached a 12-month high? Which zip code reached a 12-month high? Where is it? One zip code reached a 12-month high. And okay, we've got 46. There's that bifurcated market right there. 78746, 12-month high. There's that bifurcated market. Let's take a look at what pricing is like in that specific zip code. Let me go find that resource. For 6, up 3.7. The top 25th percentile starts at 3.6 million. The bottom 25th percentile ends at 1.2 million. But the top 25th percentile starts at 3.6 million and is up 3.7%. 3.3. Wow. 3.3 is just very little inventory, but up a lot, quite a bit. Quite a bit. Ooh, look at 2.2. Well, something's going on here. Some crazy expensive house sold in 2.2. That's the only thing. Let me see if I can find that. Top 25th percentile, 78722. Some insane property sold. Either that or it's a mistake. And if it's a mistake, we're going to find it. 22 properties sold in 2.2. Let's take a look at the sold price. And okay, 1.15 million. And something's wrong. Something's going on. I can't show this property because I'm recording this, but something's really, really wrong. I'm going to have to reach out to the MLS. This doesn't make any sense. I can't display the property, but there's a property here. It's a condo. It's a 1,600 square foot condo. Nothing really to it. And it says that it's sold for 1.15 million. I mean, it looks nice. It looks decent. You know, I can't share the address or else I'll be can't share the address. They will cancel this video, and because this is actually recorded publicly, I can't share the address. Can't share the MLS number. Okay, this is interesting. But there's the data right there. There's the top 25th percentile. But we didn't have a lot of properties that sold, so that's what's contributing to that top 25th percentile number. So there you have it. Few properties that just went sky high in that specific zip code. But the price just does not make any sense. I mean, it's a nice zip code. Don't get me wrong. I mean, I like that area. I mean, it's south of Mueller, great area, proximity to downtown, proximity to Mueller. So I do like that area. I like that area a lot. I'm just stunned that some of these prices of some of the recent properties that sold within that pocket. It's like, wow. I mean, you've got 3 properties that just blew up in price. Really interesting. Crazy. Anyone else hearing this on their listings? Oh, that one was my client's favorite. Then crickets, no offers, no second showing. Yes, Absolutely. I even show you a text message on one of my listings, actually expired. We did a very short listing agreement. We're going to try again next spring. I was like, Dan, it's my client's #1 property. I'm like, great. It's like, I think they just say that just in case you might be negotiating an offer or something like that. And then afterwards, it's like, hey, where are you? Just nothing. Absolutely nothing. So yes, we've had situations like that happen. Absolutely. Let's see if there's anything else that is going to be of value for you all as we head into the month of August. We have updated pretty much everything we did. Let's take a look at the type of market, and then we can close out our meeting. We've got 48 zip codes that are still considered in a seller's market, a vast majority, but that's using months of inventory. And I cannot stress enough how deceptive that figure is, because when you look at the number of properties experiencing price drops and the price drops that they are experiencing, it's pretty staggering. You take a look at the 78721 zip code, there are 107 listings currently in the market. 67 of those have had a price drop. And the average price drop is 10.4%, which is really substantial. Those sellers are noticing, agents are noticing, and they are starting to adapt their listings to that decrease in showing. You've got to be ahead of the curve. You've got to be proactive. You've got to do a competitive analysis as opposed to a comparative analysis. It no longer matters what a property may have sold for 2-3 months ago. What is the current level of competition right now? On the listing side, put your buyer's agent's hat on and look at those properties with that buyer mindset. On the buying side of it, realize that the market is giving your buyer some additional leverage as we enter this third quarter. It is 10 or 11:09, you all. Thank you all so very much for joining. Super appreciate it. I want to remind you that we do have our contract proficiency review using Brokermint. We've got a record number of people doing the contract proficiency using Brokermint. Please do the contract proficiency in Brokermint exactly how I am showing you on the video. The only people that are frustrated with Brokermint are the ones that are saying, no, I didn't watch your video. I just wanted to figure it out. I beg you, don't do that. I beg you, don't do that. Just watch the video and follow that to an absolute T. Just do it exactly how I'm showing you. As you learn the product, as you learn the system, then play with it. Do whatever you want. That's fine. But it's going to be impossible for you to submit an offer if you don't follow the system that I created. It is so different than Transaction Desk. In my personal professional opinion, it is a lot better than Transaction Desk. That's why we're transitioning to it, but it's different. It's like going from, I grew up driving stick shift. It's like if you all of a sudden I put you in a stick shift car and you just had to quote unquote figure it out without any instruction. It'd be very difficult. It's the same thing. So follow the contract proficiency tutorial, the video, to an absolute T, and you are going to love the system. Thank you all so much for joining. Super appreciate it. Join us Wednesday at 10 a.m. for our broker Q&A contract proficiency. We're focused on Brokermint because we want to be fully using Brokermint September 1st. That's what we want to do. We do not have a Friday meeting this Friday. I will be flying the kiddo and moving her up to Chicago. So this is when I move her to Chicago. So we board a flight Friday afternoon, but we are packing and getting all of the logistics done for her move in the next 4 days. So no meeting on Friday. If you have any questions, comments, concerns, criticisms, or complaints, please let me know. Always here to help. Otherwise, I will chat with you all later. Thank you all so very much for joining.